Port operators and manufacturers in Singapore are ramping up their adoption of technology to secure supply chains and predict potential shocks. But with the ongoing geopolitical conflicts and brewing trade tariffs, shipping rates and prices could go up, leaving those at home to bear the costs. Nasyrah Rohim with more.
When attacks at the Red Sea intensified earlier this year, ships were forced to reroute, resulting in delays. At Singapore's ports, the congestion piled up. In May, vessels that used to take less than a day to dock were waiting up to a week.
In the last couple of months, the freight rates for shipping has actually gone down from the high 2 or 3 months ago. I think for 2025 is probably a continuation of our what we have to prepare for in the last couple of years, and that is around geopolitical tensions, changes in how we diversify our supply chain, how we prepare for technology impact.
That's why operator PSA is gearing up for the year ahead. These automated vehicles at Tuas Port will be getting a 5G upgrade so they can track the movement of cargo from berth to ships in real time. But a Trump presidency next year is casting doubt on global supply chain resilience, especially as the incoming administration has hinted at hiking tariffs.
When there's expectation of higher tariffs, the companies will stockpile. So in the short term, that may actually cause a spike in imports, and therefore potentially shipping rates will go up.
Local manufacturers that import raw materials or have overseas production may be hit the most. For instance, small and medium enterprises in the semiconductor space faced disruption.
SME sectors here are a big part of the supply chain of the semiconductor manufacturing. And when the projects are delayed, basically they have no business for that period. With a dry season of no business for 3-6 months, it can impact these SMEs very severely.
To get better oversight of their supply chain, some are turning to firms like Epicor.
Their inventory data, we can start looking at some of the drivers of that specific data and obviously then see where we can improve.
Their software can predict demand and track products and shipment so that companies can adjust their inventory accordingly.
We see a lot more positivity in the business trends or business for our customers, maybe in the second half. So I think it's all going towards growth. Also looking at the end of this year and next year, I think growth is expected, and that's bringing a lot of positivity to the business.
Industry watchers say that with the growing demand for electric vehicles, this could signal the need for greater diversification of supply chains. And that will mean tapping further on Singapore's ports to trade reliably along one of the world's most important waterways.